Hey guys, and welcome back to my channel. Vancouver real estate inventory is finally back up. We're going to talk about what this means for real estate prices today, but also what it might mean for prices as we head through the year. Real quick, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. When I'm not making videos like this, I'm helping clients buy and sell real estate all over Vancouver and the Lower Mainland. So if that sounds interesting to you and you wanted to chat with me one-on-one, you can book me for a free call in the Calendly link below and subscribe to this channel so you don't miss a future weekly video. All right, so we're gonna hop right into it. If you've been following my channel over the last few months, you might have seen a video I did a couple weeks back saying that we are headed towards an inflection point in the real estate market when it comes to inventory, when it comes to prices, and how I was gonna update you on where prices are sitting after we've seen added increased spring inventory. And now we've actually seen some more data in terms of just how much inventory has actually hit the market. So Metro Vancouver for April, we are now inventory-wise sitting more than 25% above our 10-year average. Much of the story since about 2020 has been extremely low inventory levels. I had been feeling all through this year inventory picking up, but significantly in March and April, and to the point where new listings that were put onto the market in April 60% higher than April of last year. Our total inventory for active listings in Metro Vancouver, over 12,000 total listings, and we haven't seen that sort of level since the summer of 2020. So the real estate listings are back again. I referenced this in a couple videos earlier, and I said I was going to watch the real estate prices for the different segments because that's really going to tell us, just how resilient is this Vancouver real estate market. Historically, as we've looked back over the last few years, I think the market has surprised a whole many of us in terms of, interest rates being incredibly high compared to modern times, and yet sales keep on ticking and prices keep on ticking upwards, and much of that was due to restrained inventory levels. So now when we look at prices, what happened with detached homes, what happened with attached homes, and what happened with condos, we saw price growth amongst most segments. Now the one metric, the one product type that didn't grow in price and actually decreased by 0.1% benchmark price were condos. And that was something that was expected. It was expected that, condos of all product types are probably to be the most affected by this added inventory. The reality is when we look at detached homes, we look at attached home, townhouses, etc. Really, detached homes, there's still not a massive influx of these homes hitting the market. When they do, they require, a lot of work. It's not exactly great inventory, but condos where we have, new projects completing. So when that happens, a lot of clients, they will complete on those units. They'll put them onto the market to sell them, usually with a shorter time window until they finally decide, okay, I'm going to rent this out. I'm going to take it off the market, whatever it might be. So condos we knew was going to be the most impacted by this inventory, and that's why we saw prices level out for condos. So the next question is why all this condo inventory? Why all of this new inventory? We can't ignore that spring is a heavy listing period for Vancouver real estate, for most real estate markets out there. So, we have to factor that in, that many people are already planning to list their properties in the spring. So we have that. We had some, obviously in Vancouver area, especially most affected by a lot of these Airbnb restrictions that just hit the market May 1st. Now, we had known that was going to happen for quite some time, but I think what was happening with the owners of these properties is they were testing out the long-term rental market, trying to maybe rent these furnished long-term because they already have these properties furnished. So there were several months lead up to this new legislation where, these homeowners, property owners were thinking, okay, I'm going to put this on the long-term market. And what we've seen in the rental market over the last few months, we've seen it stagnate. It has flatlined. We're not seeing rental price growth. I think the demand for these furnished rentals if they are not on a short-term basis, are not as high. Most people that are renting long-term, they have their own things that they need to bring with them. So these furnished rentals, a challenge on that long-term rental market. And so you had these property owners testing the market on the rental side. Meanwhile, you have the provincial government seemingly every couple weeks taking another kick at landlords through new legislation. For example, the last one is, needing to give 4 calendar months notice now to move into a property where a tenant is on a month to month. We don't know exactly when that kicks in, but that's just one example of, policies that are tenant centric, affecting the landlord. And so as this is going on, I think a lot of these property owners were like, time's running out as well, so they're throwing those units on the market as well. So you're seeing a lot of those condos hit the market, especially I say Vancouver area, because that's where the heavy focus for Airbnb guests are, if you will. So added inventory in the condo space, this is what happens. And so in terms of answering my questions, how resilient is the market? I mean, we are clearly at an inflection point, because this month in May, we're also seeing added new listings. Of course, I have searches set up for a multitude of clients out there that are looking to purchase properties. So all across the Lower Mainland, I'll have MLS searches that email me every time listings hit the market. So that might be, for example, if you were to reach out to me and say, I'm looking for a detached home in this pocket of area with this budget, I have a search set up where the clients will get an email, but I will as well. So I have all these searches set up, and so I get a decent gauge on inventory on the market just based on all of these searches I have set up and how many emails I'm getting on a daily basis from the site. So I know May is going to also be a heavier listing month. We also have some changes to the capital gains tax as of June 25th. And I already have one client who is going to list his property because he doesn't want to be subject to the higher tax rate above $250,000 of capital gains. So another shot, I would say, at investors and people that are taking risks in this economy, in this market, in this country. And so now these types of decisions are being made now, where it's, do I sell it now to avoid that higher tax rate? You have to keep in mind, $250,000, it sounds like an extremely high number, but for people that have held on to property or assets for, a number of years, this is going to affect, most of them, the vast majority. So there's all these kind of decisions happening in the market, added in the whole BC rental laws, favoring tenants over landlords. And so a lot of people are just saying, you know what, I'm going to put the unit on the market and I'm going to look to sell my condo. A lot of these investment properties are condos of people that own their principal residence. Maybe they have 1 or 2 investment properties they plan to hold on to until retirement. Oftentimes what I'm seeing now is they are saying, you know what, let's just put this on the market. Let's see what we can get. Maybe we sell it now versus renting it out again. So I just mentioned how, the next new rule to be implemented is the 4 calendar months notice to a tenant if you are to move in yourself for personal use, landlord personal use. And now as well, you have to remain in that property for 12 months versus previously you'd have to remain in the property for 6 months before selling it or renting it again. I can totally understand the 12-month requirement to try and avoid people saying they're moving in or moving for a short period of time just so they can rent at higher rates or just relist it for sale. 6 months is not a very long time. I can understand the thought process behind 12 months. The 4-month rule for notice, and that's 4 calendar months, meaning that if we're in May right now, May does not count as a month. So you could be at the level of 5 months notice if you, for example, are a first-time buyer wanting to buy a property that's tenanted. You have your rate, you have your pre-approval rate locked in for 3 to 4 months. And now you can't move in until your rate expires. So you can't even rely on that rate hold. I think increasing from 2 months to 4 months, to me, it's quite outlandish because it hurts people that are trying to get into the market, that are trying to purchase these first-time buyer properties. And I think what we're going to now see in the market is we had already been seeing it, but not to a great degree. But I think we're going to see a lot more cash for keys scenarios. And cash for keys is basically when a landlord goes to a tenant and says, hey, look, I'm going to sell my property. Do you want to work out an agreement right now where I give you some cash and you move earlier so I can sell this property without the tenancy in place? It increases the value of the property, and oftentimes the tenant looks at it and says, very likely, especially if they're on a very low rent, very likely an end user is going to move into this property. They're going to kick me out anyways, and I'm not going to have anything. And so these cash for keys scenarios, they often happen before listing a property. For the landlord side, they add value to the property. Much easier to show a vacant property, to stage it, to have it looking beautifully, to set yourself apart from all of the different condos on the market. So that becomes even more important. I think that conversation is going to happen more frequently. And the second question now is, should this 4-month notice come into place? There's still question marks in terms of which date that's going to be. Is it sometime this summer? When exactly that's going to be? Does that make cash for keys more expensive now? Because if the tenant is to stay in the property, they have that 4 months. So now, there's a longer duration of time that they have security, where now the cash for keys conversation goes up. Look, I'm not for booting out tenants. I don't want to see tenants kicked out on the street or anything along those lines, but I am against things that I believe stand in the way, especially of first-time home buyers getting in the market. Because if these tenanted properties stop becoming an option for first-time buyers, these are often perfect properties for first-time buyers to go after, because you generally don't have investors wanting to purchase those condos. They already have tenancies in place. So these are perfect properties for first-time buyers to finally be able to realize their dreams of owning a property. And now they're going to have to give 4 calendar months notice. Who knows what their scenario is for their own timing that they need to move. And again, that rate hold that we talked about, time creates uncertainty. I think there needs to be ample time for people to move, but I think extending that, really doesn't do great things for that first-time buyer. So circling this all back now to what exactly is happening in the Vancouver real estate market with this added inventory, with prices inching upwards for detached, for attached, but not for condos. It's almost like a market. Consider the Vancouver real estate market like a premium vehicle. But you're running it on normal gas, right? 89 octane, whatever it is. Let's not get started on gas prices, but you get the drift. You have this machine, and now, it's just kind of chugging along. It's not frenzied by any stretch. Is it active? Yes. Are certain properties not getting any showing requests? Yes. Are certain properties going into multiple offers? Yes. And what I'm finding is that, price trumps, in a market where we are obviously affected by affordability, not just real estate wise, but just cost of living. Price trumps. You have to be able to fall in line with the budget of whoever your potential buyer is for the product type that you have. So we'll see, I'll see a lot of condos on the market. I'll take one look at it on paper on MLS, and they're just asking, a crazy, ridiculous price. And so these properties aren't going to sell. Very often when I look deeper at these properties, they may have a tenant in place. And so oftentimes when you have that condo that has the tenant in place, the seller is just, they're trying for a bit of a magic number. And, as a consolation prize, they're getting rental income anyways. So it's not terrible for the seller to be trying, this higher price. And then you have people that, they're wanting to sell the condos they're in. They're wanting to move into detached homes or larger homes, but there's not a ton of quality inventory on that side. And so in doing so, they are also asking for higher prices. So you have a glut of inventory that's sitting at higher prices. So if you come onto the market, if you're a seller and you're watching this video, marketing is incredibly important, but pricing is so important, because you can set yourself apart from those active listings. So, when we're putting together price assessments on properties, we try really hard not to look at active listing data. We're looking at sold prices so we can see what properties are actually selling at. When it comes to looking at active listings, you still want to take a look at it to make sure you're in line with asking prices, but more so, if you can price yourself $10,000 this way or $10,000 this way based on what active inventory around you is doing. So if you can place yourself, say 10,000 less than a competitive product, or just be right in that wheelhouse, you still want to take a look at it, but you should never look at active listings to determine your value. So you have this higher priced inventory, floating inventory there, I'll call it, and then the well-priced stuff, it's getting snapped up in multiple offers. So, for the viewer out there, perhaps you're getting confused because you talk to one agent, they tell you, oh, the market's crazy, it's ridiculous, it's frenzied. You talk to another one, they say it's slow. It really comes down to the product, really comes down to how it's priced. Now, before I close off this video, I want to give a message to a buyer who maybe is watching this video and thinking, is now the right time to buy? Do I wait for the rates to, get cut, which are going to happen this year? Look, the reality is when we see a rate cut, and it's going to be this year, it's likely to be marginal to start, and we're not going to ever get back to the rates, barring something crazy, to what we saw in the summer of 2020 and in 2021. So when we do see that rate cut happen, it's not going to create some sort of frenzy into the market. There's not going to be a whole host of buyers that are going to see a 0.25 cut. They're all going to jump back into the market. Any realtor that's telling you that, one of the things that grinds my gears is when I see real estate agents say stuff like, get in before they drop the rates. This is your only chance, etc., etc. It's going to be crazy when they drop the rates. This is extremely unlikely to happen. So the first message to the buyer is, don't panic and think that you need to make a dumb decision now just to beat a rate drop. But it might be a good time to make a smart decision. What that rate drop will do is undoubtedly it's going to create positive headlines. Positive headlines trickle down to the buyers, and buyers will get curious again and they will come back into the market. At the same time, believe it or not, there are sellers that are still waiting for the market to get hotter, and they believe that when this rate cut comes, the market will get hotter. So it's going to be a catalyst for inventory as well. So don't expect any sort of frenzy. If it were me and I was looking at condos specifically, I'd look at a couple things. Number one, all of this added condo inventory that's on the market right now, meaning that you can write aggressive offers, you can write below asking, you can have all your subjects in there. If purchasing property is affordable for you today, I think it's a great time for a long-term purchase. You have options, you're not vying against as many buyers, and yeah, market is probably going to get a little bit more active when we see a rate cut. So there you have it, guys. I hope you enjoyed this week's video and you learned something. If you did, hit the like button, because what that does is it takes the video and it sends it out to more people so they can also learn from it. And if you like weekly Vancouver real estate content, subscribe to this channel so you don't miss next week's video. And lastly, if you're in the Vancouver area or the Fraser Valley and you wanted to talk with me one-on-one about your real estate situation, you can book me for a free call in the Calendly link below, or just send me a text. Give me a call, shoot me an email, whatever's easiest for you. Happy to chat with you one-on-one, but I want to thank you again for watching this week's video, and I look forward to seeing you next week.